Hi, everybody. Happy Monday. Hope everybody had a great weekend. I know my hair looks very odd because I'm trying to do something new with it. But this is your girl Siobhan with Parting Seeds Bookkeeping LLC. Hello. Happy, now that it's 1 o'clock in Vegas, happy Monday afternoon if you're overseas. Happy morning. Happy Tuesday. However the day greets you, I hope it greets you with many, many blessings. So, I have been posting the last week or so. Hi, Jennifer. The last week or so, and then most recently the last couple of minutes about this live video. I want to bring to you learning how to love paying your bills. And this is a topic that even if you don't have a business, you probably either don't want to hear about, or if you do, you're like, I know, it's the first of the month. I got rent, I have mortgage, you have car payments, insurance payments. I don't want to hear anything about any of that stuff right now. I just want someone to take the money from me. I don't want to look at it. And I just want to be done with it. But actually paying your bills, and especially when you have a business, paying your business accounts is a great thing. And you should learn how to smile when you do it. I know a lot of you are like, what the heck are you talking about? Why would I smile if I have bills to pay? But I'm going to get into all of that. So I just want to kind of greet everybody. I can see my mother is on here. Hello, mother. For anyone else that is joining, again, this is Siobhan Askew, Parting Seeds Bookkeeping LLC. We are a full-service bookkeeping firm offering accounts payable, accounts receivable. We offer a way to simplify your life and your business with organized bookkeeping. Everyday transactions, from business meeting lunches to paying your accounts to your expenses, handling your reports. We take care of it. Okay. To anyone joining from Instagram or LinkedIn, if I send a message on LinkedIn, this is regarding paying your liability accounts, and we are going to get into what a liability is, how it pertains to your business, what type of accounts mean you have a liability account, and really why you should learn how to smile, when you're paying those accounts. For me, it's important. I think for you, it's going to be important. And what I want you to get out of it is a different perspective on how to handle your business. Paying bills when you didn't have a business, you're like, all right, it's a necessary evil, if I could put it in the simplest terms, a necessary evil. You're like, okay, I don't want to do it, but I know I have to, and there's a reason why I have to. So, let's dive in. Before I get started, if anyone has any questions, feel free to comment while we are live. If you watch it later, send me a message on Facebook, Parting Seeds Bookkeeping LLC, or if you're one of my IG lovelies, Parting Seeds 2017, or LinkedIn under Siobhan Askew. So, let's get started. I want to start with a little story about myself and my journey with what on the business side we call liabilities, on the personal side, just bills, right? So when I was 18, I entered college year 2000, August of 2000. And I was a Generation X, so I believe. Now I guess I'm a millennial. I don't really know, but whatever. But at that time, there were a lot of campaigns going on campus, and there were a group of people under the bridge that connected my dorm to the quad. And basically these people would say, hey, get a free t-shirt, get a free phone cards. I come from an era where we had phone cards. MCI and AT&T used to have phone cards where you could take like an hour I think 1,000 minutes for free and call whomever, locally or anywhere in the US. And you would get like 5 phone cards, you would get like 3 t-shirts, there would be a water bottle or a keychain. In order to get those things though, you had to sign up for a credit card. So me being, young, naive, and silly, I'm like, oh, okay, great. I can buy shoes and toiletries and food and go shopping and have a great old time. And didn't even think twice about what I was signing up for. Well, 30 days had passed, and all of a sudden I had like 7 credit cards. And I'm like, wait, where are all these credit cards coming from? I don't remember. And then I was like, oh yeah, that was the t-shirt that I got. Okay, yeah. So as the weeks and months went by, I'm buying things. I was paying the cards off, I'm buying things. Then somehow it just all got away from me. And I started getting bills in the mail. And I'm like, what's this? 18-year-olds are like, I don't know what this is. My mom has that stuff. My dad has that stuff. Other people who I was used to taking care of me, they got those things, not me. But eventually, those were bills that I had to pay. They were creditors that wanted their money. They were bill collectors who wanted their money. And, eventually they got paid. But I guess the purpose of the story is that if you don't understand, what you're signing up for, if you don't understand why you're receiving an invoice from, a credit card lender or from the bank regarding a loan, you have to recall and retrace your steps. What did you need the money for? What did you want the money for? What were you trying to do with, all these finances? Hey, Paris. Hey, Sean. Thanks, guys, for joining. What did you need the money for? So, 18... Again, young and dumb, and I didn't realize that what I had were liabilities against me. I didn't realize that, paying someone something that I had borrowed was going to come back later on in my life and affect me and affect things that I wanted to do, affect dreams and goals that I wanted to take care of and achieve. So you really have to understand, even more so when you have a business, what it is you're getting into when you take on a liability. So let's gonna break it down. What is a liability? What is it? I think a lot of people think of liabilities in terms of insurance. And I used to be an auto and home underwriter. And so liabilities we spoke of were male drivers, youthful male drivers, people with severe citations on their driving record. They were higher risk. They were in a category that we really did not want to insure, but perhaps the state did not allow us to not insure them. But they still had some liabilities against them. It kind of works the same thing with money and money for your business and creditors. You take out a credit card, personal or business, you take out a loan for working capital or for seed money, that is a liability against you. A liability is a type of an account that you owe someone else. So if you are just opening up a salon, if you are trying to expand a business, you have a construction business, you want to expand, if you're trying to hire more staff, but you don't have the capital required to handle at least 6 months of that expense and all that entails, you're going to have some money that's going to need to come up somewhere. If you can't raise the money, if you don't get the familial support for your business, if you're trying to own a business, take care of a business, and work a full-time job, but the money from the full-time job goes to your personal bills, taking care of your personal insurance, then the money is going to have to come from some other resource. Enter a bank. Enter a business credit card account. enter any type of money from the Small Business Association, or if you have local community organizations that lend to first-time businesses, small businesses. If they are not grants, then it's money that you have to pay back. It's money that you owe. It's not a bad thing. It is a normal, everyday part of business that must go on and continue so that you can keep your doors open, that you can keep offering the best products and services to your client base, right? So when we talk about liabilities, there are a lot of accounts that fall under that category, and it's more than just credit cards. It's more than just SBA loans. It's more than just a note that you borrowed from, a lender, or an unsecured account. Depending on your industry, for instance, the apartment complex. If you own an apartment complex and you want to have a renter in one of your units, what's the first thing you usually ask for besides application fee, and references, maybe, if they even do that anymore? That I know of, most apartment complexes are going to ask for a security deposit to secure that space for that apartment you're going to rent to someone else. Well, and let me use myself as an example. Me as a tenant, I pay a security deposit. From my personal checking account, I'm taking money out of my account and giving it to you as the landlord. Well, you as a landlord, your business as the complex, you're going to receive that money, but when I move out, you have to return that money back to me. So there's a little bit of an equation, and I'm going to post this, not really an equation, but it's a part of how bookkeepers balance the money coming in and the money coming out. Your balance sheet and your profit and loss statements. This is a part of what we do to make sure you understand where every penny is coming from and where every penny is going. So to kind of organize it here, there's a such thing as a debit and a credit. For me as a tenant, I would take money out of my personal account, right? If I use QuickBooks to track my expenditures and my expenses, if I use QuickBooks to kind of organize all of that, then what I'm going to do is credit my personal checking account, which is one of my asset accounts, something that I own, something that we talked about in another video a week or two ago. And I'm going to give that money to you as the landlord, as the complex, as the business. You then are going to also take that money in and debit it to one of your asset accounts. But when I move out, you're going to then refund any money less any damages that have, taken place in the unit. And that's going to go into a security deposit account as a loan. So, that's just like a real life example, if you don't have a business, but it's a real life example of how bookkeeping takes care of money that leaves your pocket, it leaves your paycheck, it leaves your bank account, and it goes somewhere else. But eventually it's going to come back to you in one form or another. And it's money is cyclical like that. I have it, I spend it, I get some more of it, something is refunded to me. It's a huge cycle of debits and credits. But specifically with liabilities, it's a very important part of your business and understanding how your business works. One thing that bookkeepers do, we like to have these pretty reports for you, right? And there's 3 of them. You have your balance sheet, your income statement or your profit and loss statement, and your cash flow report. And either monthly, quarterly, or annually, based on when you say your tax year, we give you a report to look at what you have brought in terms of your revenue and your net revenue. We also look at what you spent. And one of those accounts is your liability account. As an add-on service, we look at benchmarking to see, are you spending too much in certain accounts? Are you not getting all of your receivables in on time to where you can pay the accounts that you owe? Very, very important, because when you're looking at a type of accounting method, cash or accrual based, when you look at the money that you have coming in based on when services were rendered or when you got paid, and there is a difference, that's going to make or break how you look at the end of your fiscal year. Case in point, you open up a business, you apply for working capital, and working capital, again, this is something that we covered in a prior video, is the money that you already have, assets that you already have, minus the liabilities that you already owe or have paid off, and then you're looking at what you have left over. That is when you ask for working capital. So when you apply for working capital, you apply for $50,000. $50,000 is used to expense your utilities, to pay for your telecom equipment, which would be your phone line, your fax, your computer, your internet, any automated programs that you use to schedule appointments, to book meetings, to handle the money coming into your business account. And then you have employees. God willing, you have employees. You have a group of people who are going to help you put your business on the next level because you offer amazing services and products, right? You have to pay those people, don't you? I don't know any business outside of the nonprofit industry where employees or staff members work for free. To pay those people, there's a slew of liability accounts that come along with hiring employees. One of them is your payroll tax liability account. And we're going to talk about payroll in another video later on, but I want you to know that when you begin to create all of these liability accounts, you have to have your money slotted accordingly so that you know what you have each week, each month, each year. You know to the penny how much you're going to spend based on the number of employees, based on your inventory, how much you sell, how much business is coming in every day, every month. You have to be aware of that so that you don't get caught up at the end of the year and you don't owe anybody. All your accounts are paid, or if you have some type of extension or agreement or whatever the terms that were set forth between you and the creditor, you have all that taken care of, and at the end of the year, you're good. That's a perfect world. I understand that. Because if everybody followed a schedule, again, whether you have a business or not, if everyone followed the schedule of paying their bills on time and setting up, even automating when the bills are going to be paid, who they have to pay, how much they're going to pay, would you really have a need for a bookkeeper? No, you wouldn't. The fact is, it doesn't happen. And every year, people are audited because they forgot, because they didn't get the invoice, because A, B, and C reason. So if you aren't aware of even why you requested the money, if you don't have it organized to who you pay, when you pay, how much you pay, then you're going to come up short at the end of the year. And something that I am finding out is that a lot of businesses, they want to work off of the accrual method, which is the day the service and good is provided, that is the day you document how much was received. But in actuality, they're working off of a cash accounting method, which is, I don't have the cash yet, but when I get it, I'm going to report it. But it's like, no, you can't do both. You can't do both. It's either cash method or accrual method. And when it comes to your liability, these accounts that you owe, the money that you took out, the loan that you asked for, you cannot toggle between two accounting methods to pay them back. Set a date, abide by the terms, and go ahead and pay it. Now, if they have some type of extension program where you fell short, then by all means apply for that program so that you don't fall behind. But I guess my point is liabilities really, really do affect your business. They affect your business bottom line. They affect how you do business and if you do business. To put it real simple, you don't pay the bill, you don't pay it on time, you don't communicate with the lender, which is a big part of why people and businesses fail. They don't communicate, or they feel that they can get around paying the bill. No. Communicate, and then they will work with you. They will help you get back on track. If there's another part of your business that you need to kind of scale back on, maybe you're doing and spending too much on your ads and your marketing. Maybe we need to scale back on that so we can have more money for the liability accounts. Another example of a liability account is unearned revenue. So, for those businesses who look in their account, they're like, oh, okay, for the month of January to June, we made over $180,000. Cool. No, you didn't. No, you didn't. You may have documented that you had $180,000 come into the business, but you haven't set money aside for those accounts that you owe. What is your expense report looking like? Did you pay all your payroll tax liabilities? Have you paid your sales tax? Have you paid your use tax? If you don't know that, then how do you know you really have $180,000 that you made from January to June? You don't really know. And you won't know until at the end of the year, you file your taxes and then you end up owing. Well, you don't need to owe. Or you don't need to owe as much if you had an organized set of bookkeeping and record keeping in line for your business, which includes paying those liability accounts. So what I'm also going to do is post a list of liability accounts based on just a couple of different industries. I specialize in the beauty industry. So salon owners, barber shop owners, nail salon owners. Hopefully we'll get into the massage industry, but that's really going to therapeutic and medicinal niches. So I really want to stay within my lane, okay? But wherever God takes me, I'm going. So there's that. But I'm going to post a list of liability accounts based on industries. And actually my cousin, Paris, let me pull up his business Facebook page. I just want to shout you out, Paris, because he's in the travel industry. He books travels for U.S., for international. And his Facebook page, I'm pulling it up, Paradin For You Travel Group, and I hope I am pronouncing that correctly. So let's say you are a travel agent, okay? Let's say this is your full-time business. You help people get away from their business and help them relax, release. I'm sorry, I had a different world moment there. Shout out to the character Whitley Gilbert. You help them just go on vacation. Florida, California, the Bahamas, whatever. Well, what are your expenses? What type of liability accounts do you owe? You probably have a business credit card. You probably do a lot of networking. So that's a lot of breakfast, coffee, donut meetings. That's a lot of lunch salad meetings. That's a lot of dinner. Steak meetings if you are a steak person. Me, I prefer a nice shrimp salad or a burger. I'm not picky. So you probably have a lot of those types of expenses that are likely put on a credit card. If it's your business credit card, that's an account that you owe that you're going to have to pay back at the end of the month, beginning of the month. However, you set the terms or abided by it. You don't say anything. They already said it. You just have to pay it. But learning what your specific liability accounts are based on the business that you're in is also really crucial, because there might be a specific way that you have to pay an account. There might